Hello.
Sound check 1 2 1 2. Can someone speak, please?
Yes, yes, we can hear you, Thomas.
Can't hear
Good
you.
afternoon.
What should be the problem?
Thomas, 1 2 1 2. You hear us? Check check 1 2. Check 1 2.
Hello,
Hello.
how are you?
I'm good. Thomas, you hear us?
I think he's trying to get YouTube live up, so he's busy.
Okay. That's it. You can hear us? Maybe not yet. I'll continue to do laundry until we start the interesting part.
Can you speak now? Very good. How are you? Hello, Theory. How are you?
I'm fine, and you? You hear me? Oh, maybe not.
Strange.
Oh, yes,
Shall
strange.
we hear you? But we don't hear Thomas. Okay, we hear Thomas, but it seems like he don't hear us.
So I said I'm fine, and you?
I think Thomas don't hear us.
Yeah, I guess.
Hello.
Okay, welcome back, everyone. I still have some problems with the headphones, so I need to fix that first before we can move on. I'm on it.
Okay.
Good evening, my lovely ladies.
Can you say something?
No.
Oh, damn it.
I said good evening, my lovely ladies.
Can you hear me now? Yes, I can. I'm not sure. Yes, not too bad, thank you. Just waiting for CPI. Hopefully, I'm gonna hold the long positions, but I'm not too confident. So, yeah, plus the President's birthday, President's Day. That's tomorrow, and a Monday, bank holiday in the US. Okay, so we got 28 minutes until CPI. And we pretty much discussed everything in the morning briefing, but I will go through again. One, two, 1, 2. Okay, perfect. You hear me? Okay. So today's CPI day. We love CPI. Those of you who trade with me for 5+ years knows exactly that. You know, I've attended almost every average CPI. So this chart goes back all the way to 2021, 2020, and yeah, CPI is one of my favorites. In most of the cases, it's easy to trade because it's 98% inversely correlated to, so gold is 98% inversely correlated to CPI. The correlation coefficient is very, very strong. And today, a CPI is said to be lower than expected, or lower than the previous one. So there's a disinflationary trend. Now, we start with the macroeconomics. The forecast for CPI today is disinflationary, which means that it should be bullish for gold, sorry. So if inflation is lower than expected, then gold should go up. But if inflation is higher than expected, we could see easily gold dipping down to 4,600 and 4,500. But we need a big surprise for this to happen. So if inflation goes back above to 3%, that would be a very, very, very big damage for gold longs. What's going to be today? I'm not sure, to be honest. I'm aiming, or I'm expecting, lower CPI numbers because I have a long position, so I'm biased to the upside. But when I look at the price action, it's a clear sell for me. So I'm having this debate with myself, whether it's long or short. When I look at the macroeconomics, I like to align myself with the analyst forecast, which is lower CPI today. You can see in the economic calendar that the forecast is 2.5%, so it's a downward trend, and inflation has been sticky, but it's going downwards. Month on month or every 6 months, it's lower and lower. But if you have an upward surprise, so if price CPI goes back to 3% or 2.8, then it's bad news for the long positions. Which one is it going to be? I don't know. I have a front-running position, which is a long position. Is it going to work out? Maybe, maybe not. But we made good money this week. Thanks God I wasn't trading yesterday because I saw how aggressive the sell-off was after hours of consolidation. Nothing is happening, and then boom, 700 pips down. How many got you? How many of you got stopped out? Mm. You're welcome. I'm happy for your profit. Making profit. Mm. You didn't trade it. Good, good, good. You saved your money. Good. Yeah, sometimes, I used to trade every single day, like 10 hours a day. I was glued to the chart. I was watching like, oh, go up, go down, and that's the stupidest thing you can do. Sometimes you need to take a break. So here we are. Sensei Forex Capital, greeting from Slovakia. Citi recommends betting on higher US inflation. Yeah, US inflation is sticky. I don't argue with that. And I have a feeling CPI is going to be higher today. And it's going to immediately close out my long position. But, we don't know what the data is, so it's 50-50. Let's check on oil. But it's still $62 per barrel. Oh, it's not that bad. I remember when oil price went down to minus $33 per barrel. Yes, 2020. Because all of the reserves, they were full, and contractually, if they can't fit the oil into the tanks, they have to pay a fine. And that's what happened. No one thought that oil can go down to negative, because everyone thought like, oh, it's impossible. It was possible. Karesh Kunta Chechanai, entering a trade before numbers is pure gambling. Yes, brother. Yes, brother. I mean, let me show you a chart, brother. Brother, trust me. I've been trading CPI for many years. And it's gambling if you don't know what you're doing. And it's trading if you know what you're doing. So this is the chart that you can see. It's 5 years of documented CPI trades. I trade CPI for 15 years now, and this is only 5 or 6 years. So it is kind of good indicator that whether I gamble or not. So long story short, guys, welcome back. Today, if CPI comes out softer than expected, meaning that 2.5 as the forecast says, then we have a clear traffic, clear direction all the way to 5,300. But if CPI comes out hotter than expected, gold will sell off. Back to the weekly pivot, at least, or even lower. If inflation is very sticky and very hot, gold can easily revisit 4,500. It's Friday. It's Friday the 13th, just after NFP. A lot of profit taking in the market. I'm not betting big, so I only have a 0.25 lot trade. And I'm gonna close down the other one, the one below. So I close down one position. I'm gonna close down the other position as well. So I'm slowly closing down the long positions, taking profit. And I'm just gonna risk small. Some top G max 0.5. I think it's going down because 4-hour third wave, and it made it 4-hour double top at 4-hour QML LVL. Wow. There's a lot of technicals in there. Soft means smaller than expected. Yes, 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 brother. Soft means soft is small, hot is bigger than expected. The forecast is 2.5, so it's slower than expected. Lower. And yeah, this is the CPI chart I talked about. So I tracked every single CPI I traded in the past 5 years. CPI and gold correlation is perfectly elastic, which means that it's an inverse relationship and is perfectly elastic. So it means that if inflation goes up, gold goes down. If inflation goes down, gold goes up. But the elasticity breaks down when the market or when the economy is facing a pre-inflation period, meaning that when inflation is at the target rate and it starts to increase, it's the opposite. But when inflation is high already, the elasticity is perfectly elastic and it's inversely correlated. A lot of imagine, right, elasticity. It's economists would define price elasticity. So imagine a rubber band that's elastic, right? So if you move one side, the other side moves with it. It's clear, right? So price elasticity means that when the price is very sticky, so inflation is very sticky, and if inflation goes up when it's already high, the price of gold is elastic to inflation, meaning that if inflation goes up, gold price will react immediately, but the opposite direction. So there's two terms: elasticity, perfectly elastic, so price moves, reacts to inflation, and inversely correlated. So when inflation goes up, gold price goes down. This is the term price elasticity. Cool, thanks. What's your position today? Sitting in my chair. Perfect position. Love it. I have a long position, brother. I have a long position. Fundamentally speaking, so, okay, I'm gonna walk you through my thought process. Fundamentally speaking, when you look at macroeconomics, geopolitics, nothing has changed since last week. Nothing at all. The only thing, but is still uncertain, is that Trump may going to dial back or dial down on the tariffs for aluminium and some other products. Nothing's changed. Market is still selling off because of the AI worries. Gold is still in high demand. So fundamentally, nothing has changed. The question is, and the driver of today's market is 100% CPI, and everyone is looking at it. And the market will definitely break up or down. It's going to be very volatile because there's no other news. So the market will react. When you look at the rate cut expectation or the rate change expectation, it's actually decreased from 72% to 92%. It's gone up. That most traders believe that there will be no rate cut change next month, 18th of March. Now this is bearish. So the macroeconomics is bullish because nothing has changed. There's huge demand for gold. The fundamentals, when you look at the market sentiment, that's bearish on the rate cut expectation or the rate change expectation, right? When I look at the technicals, it's bearish. When I look at the expectations, it's bearish. When I look at the yields, it's bullish. When I look at the macroeconomics, it's bullish. So I get 2 against 2. Perfect, isn't it? Mm-hmm. Oh yes, I've heard that. Well, it's still just a discussion, just Fugazi, smoke and mirrors. Yeah, guys, if you're watching on YouTube, follow my Telegram channel, please. Yeah, just 1 second. What was your question? Sorry. Yeah, but that's not going up. It's a yield curve. This is what you're talking about, right? Yeah. So each dot represents a maturity. On the left, you see the short maturity yields, like 10 month, 1 year, 2 year. On the long end, you see the 30 years. So this should be watched as a linear chart. So you watch the dot and the one below. You don't look left, you don't look right. You select the 2 year, for example. I'm hovered here at 2 year. So the orange one is 2nd of February. The green one is yesterday, and the blue one is today. And actually, orange was 2 weeks ago. Green and blue, since 2 weeks ago, the yields have come down, so that's bullish. Because it's okay. But I feel bearish today as well on gold. Should I change my long position into a short or just wait for the data? I might gonna close down. Yeah, probably. But I would change it to a big sell, to be honest. I don't know, I feel it. Hello, Dorothy. Yeah, I'm gonna close down the buy. I'm just gonna wait for the data. Yeah, it makes easy, isn't it? Just fucking unchanged. Whoa, slow down, cowboy. So, yeah, NFP is priced into the market already, so I don't think it would carry on because since NFP price is just moving sideways. What about USD Japanese yen? Let's have a look on USD Japanese yen is doing its thing. USD Japanese yen is a big. Oh, hold on. Yeah, USD Japanese yen is a sell. I'm still in the sell on USD Japanese yen, as you know, because we've been profiting very, very nicely of the because of the Bank of Japan intervention. Yeah, and I enter another sell just now. Free signal. There you go. No reason to gamble when you can wait. I love the wisdoms. Thank you so much, guys. I love it. Absolutely. Absolutely loving it. Mate, I need a notebook and a pen to write down all of this wisdom. Yeah, I need to write this down. No, I write down all the wisdoms on I got on YouTube. Boom. No, I think it wouldn't. Well, it's possible because it did affect. So it's not CPI which is affecting Bitcoin. It's the rate change expectation. It's the monetary policy expectation that affects Bitcoin and everything else. It's not CPI which affects gold. It's the monetary policy expectation because you need to look behind the data. Yes, CPI is an inflation indicator, But what does CPI change in the economy? The reaction and the monetary policy path of the Federal Reserve, of the central bank. So you don't focus on, it's like when you're going on hunting, you focus, I wanted to give a nice example, but I'm too tired. But basically, look beyond CPI, look beyond the data, right? Look behind the numbers. The biggest market player is the Fed, is the central bank. So you want to know what the Fed is going to do if CPI is high, right? Or low. Oh, another wisdom, buy low and sell high. Not always, brother. I proved it many times that we buy high and sell low. So depending on where the market is going. So many times I saw that support and both that resistance, and I proved it a million times that you guys have been taught incorrectly. No, you've been taught correctly, but you don't use it at the correct timing in the market. We get 6 minutes left, and with these job data, can we expect lower CPI than expected? Well, job data is all over the place. If you look at the last 5 months, we had minus 109,000, now we had 130,000 plus. So what's happening with the US job market and labor market is a typical peak of the business cycle, because economies go in business cycles. And right now, the US economy is at the very, very peak of the business cycle, and we're going to have a recession very soon. So within 12 to 14 months, within a year, we're going to have a recession. And what we see now is the job creation slowed down. There's volatility in the jobs number. Companies are waiting out, not posting jobs, not hiring people. So this is a typical slowdown of the economy. Yes, the market did ignore NFP data. It didn't sell off as much as I was expecting. We have 5 minutes. As soon as the data is out, I will enter or not, we'll see, but then I'm gonna have a few beers with the guys. So I want get to the chopper, and then the bumblebee. Have you seen that video when Arnold Schwarzenegger narrates a National Geographic movie? And then the bumblebee. Oh no, here comes the spider. Now he's an asshole. Yes. It's an old film. Yeah, Gerdu is asking, with this job data, can we expect lower CPI than expected? So my reply is the same as before. It's all over the place. So the jobs number is, I don't know, because the jobs data is all over the place. So I don't think it would be a necessarily good indicator or forecast for CPI. It's possible, but if I look at the jobs and the labor market data, I could not tell you 100%. With regression analysis, maybe. But that's econometrics. But just on top of my head, when I look at the labor market data, it's all over the place. I could not forecast CPI. Yes, the US is brilliant. The US is always like a month. Yeah, welcome everyone. So I'm going to go through again with the macroeconomics, the fundamentals and the technicals. So try to give you the best and most information possible so you can make an investment decision, but it's not an investment advice. So I'm speaking out loud. Imagine this is a lecture. I'm the professor. CPI is the consumer price index, measures the change of price of goods and services. Everyone knows that. And based on years of data that I collected on CPI and trading and between CPI and gold and CPI is inversely correlated. So when CPI goes up in the last 5 years, not before, the past 5 years, when CPI goes up, gold goes down. When CPI goes down, gold goes up. This is because of the interest rate expectations. And right now, we have two options. If we have a hotter than expected CPI, meaning that if CPI comes out 2.8, 2.9, 3%, gold will sell off and break out from this channel. But if you have a soft CPI, so it's a low number, 2.5, 2.4, then we have a clean traffic all the way to 5,400, right? And we got 2 minutes left. Good luck. I don't have any open positions. I'm gonna wait out. I might not even gonna trade. Of course I will trade. I'm just joking. But yeah, I'm gonna wait for the data today. Because someone said that without knowing the data, it's gambling. And I feel bad now. No, it's like, you know, I don't like when people telling me what to do. Well, if he has the same chart as I do, like if he traded CPI this many times as I did, like on this chart, 5 years, 12 years, then be my guest. Well, anyhow, after that, I'm already waiting for the lads are waiting for me. We're gonna open a few beers. We're gonna open a few beers and then just enjoy the weekend. Monday off, tonight off. Okay. Oh shit, I need to buy the flowers for tomorrow. Damn it. Okay, we got 30 seconds to go, ladies and gentlemen. If you see the CPI data, just shout it out as loud as you can. Okay. 25 seconds to go. Who's buying, who's selling? Write in the chat. Oh yeah, and it's Friday the 13th. And here we go. 10, 9, 8, 7, 6, 5, 4, 3, 2, and 1. Place your bets. Market is, can you see it's going up? I'm gonna enter. All red. Yeah, I'm gonna enter a buy. It's red. Red is good. That's good for gold. Just enter the buy position. 2.4, very good numbers. Inflation is disinflationary. Very good. Very good. It should be bullish for gold. So we're going to see today 5,100. So you get yourself an easy 1,000 pips. Easy trade. They not with the rate cut expectation is decreased now with the softer CPI data, but I doubt that they're going to cut interest rate. Yes. Yeah. Well, hold on, it's mixed because when you look at the job market, so just looking at last NFP, they wouldn't cut because it's inflationary. But looking at the CPI today, they would cut, but they wouldn't cut because it's only one single data set. But when you look at the series of data, like a time series, so you look at the whole year, 6 months, or a period, different story. But yeah, I think yeah. So gold will go up to. No, go ahead. Mm. Yeah, yeah. But the Fed is now very, very cautious. Okay, guys, in my translation, in my narrative, because the data today came out softer than expected, that's a disinflation acceleration. Earlier rate cuts are priced in, yields will fall, and the US dollar is going to weaken. So when I look at the US dollar on the DXY, you can see it's already started to weaken. Yields also started to go down. Have a look at this drop on the 2-year Treasury yield. This is a clear, clean light for gold to rise to 5,100. That's 1,000 pips. You don't need, I don't need more. If I can catch that a few hundred, I'm happy. But you were given every information today to trade CPI correctly. I explained everything. I entered the position. Now it's up to the market how it's going to interpret. We have a New York Open left, and headline risk is great. So headlines could shape the market, but now I have my friends waiting with the cold beer, so I'm gonna say hi. If I had to choose between them and you, sorry guys about the cold beer, you can't beat it. Thank you so much. Have a good evening. See you next Tuesday. Bye. Bye. And those of you who would like to join the AlphaFX community, I'm sending a discount link into the YouTube chat for £200 lifetime opportunity. If you made some money today, invest in your education and come trade with us. Thank you so much, guys. This is the AlphaFX.